that could come about from the Q2 earnings in terms of pressures for the margins. Let's talk about all of that and more, as well as particularly Dabur right now with the recent announcement about their investment in Sri Lankan unit. We've got Mr. Sunil Dugal who's joining us right now to throw some more light on this very particular issue, as well as what's been happening in the industry as a whole. Mr. Dugal, thanks very much for joining. Firstly, let's start with the recent announcement regarding the investment in Sri Lanka. How much are you investing, and what are the products that Mr. Dugal will be manufactured thereof?
We are setting up a greenfield manufacturing unit north of Colombo, which will entail a total investment of 70 crores in the next 1 year or so. The plant is essentially for beverages to feed the India market, but some production also will serve to service the Lankan market. Going forward, we would also add on some cosmetic items into the plant, but in the first phase, which will be completed in August, September of next year, we will be producing only beverages essentially for South India.
Any further expansion plans in Sri Lanka and investments on that front? Are you, keeping aside funds for more overseas acquisitions?
See, Sri Lanka is a comparatively small market. The population is a little over 20 million. So there's probably not a huge market for our products as of now, but there is some potential for generating some demand in that market. But I think, as I mentioned earlier, the primary function of this plant is to manufacture beverages. We have two plants today. One is in Nepal in the northeast part of the country, outside the country of course, and one near Jaipur, again in the northwest. So these two plants are adequately equipped to service the north and the east Indian market, but the supply chain to the south of the country becomes very unwieldy. So it's really to service the South Indian market and reduce the freight and the supply chain attendant costs is the rationale for the plant. But we will definitely be adding on some cosmetic items going forward. But the priority at this point in time is in view of the very high demand for our products, is to get the plant on stream as possible and manufacturing to begin perhaps latest by August, September of next year.
Mr. Dugal, good morning. Sir Prashant also joining in. We spoke with the Godrej Consumer Products Management on Friday extensively about margin pressures that companies are likely to see in this particular quarter, second quarter. While we understand prices, input prices, and it's different for all companies in the sector, broadly they've come off from the recent highs, but Q2, you are as an industry still going to be dealing with high priced inventory. What's the margin damage going to be generally, not just for you, but for the industry? Is that going to be the underlying theme for Q2?
Well, we've seen pressure on our margins. They dropped in the first quarter, and that pattern will continue in the second quarter. In fact, we're sitting on even higher price inventories than on the first. Going forward, I expect the margin pressure to ease definitely in the fourth quarter and somewhat in the third, because of two reasons. A, the price increases which we have taken successively in the first and second quarters will be fully impacted in the third, and we do see some signs of commodity prices cooling off. In fact, the cooling off would have been quite dramatic had the rupee not depreciated. It's unfortunate that it has, because it's mitigated some of the impact of the lower global commodity prices. But I think if this pattern continues, then we would see some softening of prices visible in the third, and the fourth quarter should definitely be a better one. So net, I think the second half of the year would be better in terms of margins as compared to the first.
Yeah, but all that depends on how commodity prices behave, right? The management at Godrej Consumer Products pointed out that on an average 8 to 10% price increases annually for different product categories is manageable. It doesn't hurt demand. Would you agree with that assessment, or would you say there is more capability to increase prices beyond that?
I think most of the price increases have been taken. I don't see much more addition to that. Having said that, if inflation continues at the current pace and even accelerates, we may have no option but to take up another round of price increase perhaps towards the end of third quarter. I hope that won't be necessary, and as of now we are not planning anything, but we can't rule out the possibility.
Mr. Dugal, monsoons this time around have been on the positive side, a good surprise there from these last 3 months that we've seen. Likely to impact rural demand?
I I think the monsoon has been generally very good, and it certainly should see some revival in demand in the rural areas. In fact, the demand softening which we've seen in the first few months of this year has been from rural areas, and we can attribute it to high inflation. So if the agri output is good and there's more money in the hands of the farmers, it will only serve to accelerate demand from the rural areas, which will be definitely good for business.
You have put advertising spends, in the first quarter rather. Do you expect an impact on margins and, volumes in quarter two particularly?
Not really. We on A&P spends because of margin pressures, and also because we postponed some initiatives which we had planned earlier for the first and second quarter to the third and fourth. So there was somewhat reduction in our A&P spends. Now going forward, we will be looking at heightening the spends in the third quarter and also in the fourth, because we do have some interesting new projects which we would like to launch in the market, and they would take up a fair amount of cash. Also, I think we need to revive demand. We need to play our own part in reviving demand by heightened levels of advertisement and promotions. And therefore, you would definitely see an increase in the A&P ratios in the latter part of the year as compared to the first.
All right. Mr. Dubal, there's been a fair bit of talk, and we've spoken about this in the past, about expanding your product portfolio. I mean, any specific details you can share with us?
I think there will be some expansion in most categories. We'll be launching new initiatives in hair care, beverages, particularly in healthcare. And the overseas piece, of course, is very innovative in terms of launch of new products. So there will be a fair amount of activity in the new product front in the second half, especially if the margin pressures ease and we do have the ability to spend more. Then I think we will accelerate our new product developments. But this will be not confined to just one or two sectors. It will be pretty secular across the whole portfolio.
Got it. Just a quick word on the Nepal and Bangladesh units, sir. I mean, what's the update?
Well, the Nepal unit is now functioning smoothly. We did have disturbances earlier on in this year and also in the last year. At this point in time, there is no problems. We are getting near capacity production out of the Nepal unit. The Bangladesh unit is another greenfield project which we are now embarking on, and production there should begin perhaps in the first quarter of next fiscal. It's a smaller unit as compared to Sri Lanka, but it's only serving to cater to the Bangladeshi market, and it's a plant which is a couple of hours outside Dhaka, which will make the full array of our cosmetic products, even some healthcare products for the Bangladesh market.
Sure. Mr. Dubal, one final word before we let you go. There's a lot of talk about Dabur's interest in Ricketts India unit. Could you confirm if you're interested in picking it up or deny it if at all? And any other acquisitions that you're keenly eyeing out? And what's the kind of fund size? I asked you this before also, in terms of the fund size that you're setting aside for these acquisitions.
I think it's premature to talk about that particular deal which you spoke about. It's really not yet visible. As and when it is, we may have a look and may make a bid. It's like I said, too early to call. And as far as other prospects are concerned, there are always prospects which we evaluate both within and outside the country. These discussions and negotiations and evaluation procedures take a long time to fructify, and I think we need to give the process its own time. We've acquired 4 companies over the last 4 years or so, and 2 of them have come only in the last year. So I think we do have a fair amount of new initiatives on the table to take care of. So we are not that eager to acquire new businesses. At the same time, if there's value and strategically the target is good, then we'll certainly go for it.
Mr. Dubal, a pleasure chatting with you. Thank you so much for taking out the time and speaking with us right here on OpeningMoves. So talking about interest in Ricket, we'll be analyzing the deal, no eagerness in terms of acquiring new businesses, looking at hiking ad spends in quarter 3 and quarter 4. Dabur, very flat in trade, about $100 is where it's trading at. We'll take a short break on that note and come right back. We've got PK Goel of IOC. He'll be joining us in just a moment.